This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. We are wrapping up the week on Friday, June 13th, 2008. Well, the dollar had an absolutely stellar week, and for the first time in a long time, we believe the story has legs. The greenback came out swinging this week after ending last Friday on a very bearish note. The monthly employment report a week ago delivered a crushing blow to the buck, but traders seem to have forgotten by Monday. Ben Bernanke, likely in an effort to offset Trichet's hawkish comments, said early this week that inflation was a major concern and the Fed would do what is necessary to protect price stability. This is the Bernanke we have been waiting to see for a while, and the dollar absolutely needed it. His comments were reiterated by Hank Paulson and President Bush, which may have added fuel to the fire. Hank Paulson is attending a G8 finance ministers meeting today and tomorrow, where the dollar's value will likely be discussed. The Treasury Secretary earlier this week went as far as saying that intervention was still a potential tool if needed. Some of the data that may have helped the buck a little this week include yesterday's big surge in retail sales and today's CPI figures. Retail sales gained more than 1% last month, and it wasn't on the back of higher spending at the pumps. Americans are clearly cutting back on driving as much as possible with gas near $4, but they haven't been afraid to spend their stimulus checks in other ways. Additionally, consumer prices rose at a faster pace than expected, according to today's government report. This heightens expectations of Fed rate hikes later this year. This undoubtedly improves the dollar's appeal, especially when the currency is still at historic lows. We feel good about the dollar's odds in upcoming weeks, and the long-term technical picture is really shaping up nicely. Now for the big picture. The dollar's big picture decline is now vulnerable on both fundamental and a technical platform. The greenback's rally this week has changed the look of many daily and/or weekly charts dramatically. The fact that we began and ended the week so powerfully speaks volumes about what could happen from here. On the fundamental side, we simply need to see some mildly positive numbers in the next few weeks to keep this up. Jawboning from the Fed and the Treasury will likely keep investors from betting strongly against the dollar, but we will eventually need the Fed to put its money where its mouth is and hike rates. The other side of the fundamental picture is what happens outside the U.S. and other G7 economies. We're expecting that as the U.S. economy attempts to bottom out, that other economies will begin to feel the pain that we already went through. If this is the case, it only improves the dollar's chance to rebound further. It is becoming clear that other central banks are not going to act nearly as aggressively as the Fed with rate cuts if they cut at all. We certainly are not wishing a recession on any other nation, but the greenback could really use a string of weak numbers from Europe and other key economies. Till next week, enjoy your weekend. Take care.